I am Leo Wang, and today we're diving into a major shakeup in economic policy and the tech world. A significant shift in global trade is underway as the United States has implemented a new wave of reciprocal tariffs. An executive order has raised import duties from a baseline of 10% to as high as 41% for various trading partners. The European Union, Japan, and South Korea now face a 15% tariff on many goods, while other nations are seeing even steeper increases. A key focus of this new policy is the semiconductor industry, with plans for a tariff approaching 100% on imported chips. However, an exemption is being offered to companies that commit to building manufacturing facilities in the US, a clear incentive to bring production onshore. Concerns are mounting that these tariffs could harm smaller American businesses and fuel inflation as costs are passed on to consumers. Recent data already shows a significant 21.7% drop in China's exports to the US last month. In another major policy move, an executive order is set to expand investment options within 401k retirement accounts. The directive aims to allow the inclusion of alternative assets like cryptocurrencies, private equity, and real estate. This could unlock a vast new pool of capital for alternative asset managers from the nearly $9 trillion held in these retirement plans. While this could potentially lead to higher returns for savers, there are also warnings about the increased risks, higher fees, and lack of liquidity associated with these types of investments. Shifting to corporate news, a storm is brewing at Intel. The company's CEO, Lip-Bu Tan, is facing significant political pressure and calls for his resignation over alleged connections to Chinese firms. The situation is intensified by delays in the construction of Intel's critical Ohio 1 factory project. While some defend the CEO, arguing his experience in the Chinese market is a strategic asset, the controversy has already sent Intel's stock lower. On a brighter note, the space industry is seeing a surge of investor confidence. Firefly Aerospace had a stellar debut on the Nasdaq, with its stock soaring after an upsized IPO that raised nearly $870 million. The company's successful lunar landing earlier this year and a backlog of over $1 billion have clearly fueled strong market interest. This contrasts with market headwinds elsewhere, such as a sharp drop in Crocs' stock due to consumer and tariff worries. Overall, the markets are processing these major shifts, with the Nasdaq managing a record close even as other indices ended lower.